All right, everybody, this is John. Welcome to the free video, and let's just dive right in. So it is the 26th of December. So we've got 3 more trading days for the year. Last day, of course, is on Tuesday, the 31st, and I'll be doing our tax loss selling class that day. We do that every year for the last 10 years. It's a pretty fun class. So the question is what happens between now and then? So I do think that what we're looking at here is kind of a panic melt-up into the end of the year, but I am looking for possibly a couple of weeks of intense selling starting with the new year, kind of like what happened with, I think it was 2016. Again, history doesn't repeat itself, but it rhymes. So in 2016, we kind of had this rally into the end of the year with a low put-call ratio, which is what we have now. And it's kind of like this panic to get into these positions. And then once the new year hit, there was like a panic to get out. And, again, that was a drop of about 250 S&P points. So at the very least, I'm just kind of looking at, hey, let's just participate in the long side of stocks that are getting a run here. So like Amazon today is going nuts, and this is one that we've been trading. I'm still in part of it, but I actually think there's more potential upside there. It's just all of a sudden everybody's like, oh my God, we got to get some Amazon on the books. So this is one where, I mean, it's a big day trade, obviously. I've sold half, kept half, but this is one where, we're just running, so just kind of see what it can do. And then another one here we did in the room today is Google, and this is one where looking to see if we can break out to new all-time highs. We came up and got close. I think the all-time high is 64.30 or something like that. So we got within $1, and then since then it's eased off. But if we look at Google as well, you can see it's just kind of one of those where the way this market is, it's like the funds are like, okay, we got to get some of these stocks on the books. So what I'm looking at is we can actually come back up. Here is the high right there. We kind of got close, but if we can get through that, then a move into 1370 or so makes sense. And then from there, the momentum stocks, the Shopifys of the world here, got some momentum going there. I'd look for a little bit more kind of melt up into the end of the year, and then TTD. Okay, so my plan is I'm fine hanging on to these longs into the end of the year, but then I'm going to get out of them and then put on some lower risk butterfly bearish strategies in case we do puke a little bit into the first of the year. And if we don't puke, that's fine. I can always get back in on the long side. But if this is going to mimic what happened in 2016, I just want to be prepared for it. So what do I mean by that? Well, if you look at the put-call ratio here, this is as lowest as I've ever seen it. And remember, when it gets that low, it's just showing you that everybody and their mother's long. And if everybody's long and there's no one else left to buy, you kind of get these nice little pullbacks. And even if it's a reversion to the mean, which is all that was, here you actually got a much deeper correction. And then if we go and look at 2016 and how it looked then, 17, 16. So you can see that we had, low put-call ratio, meaning everybody's long. And then when we hit the new year, that was kind of the excuse, to rip it down. So just keep in mind, again, history does not repeat itself, but it does rhyme. And that's kind of what I'm looking for. All right, you guys have a fantastic rest of the year, and we'll see you in the next decade.